Are you ready for a trip to China? Well, with the current condition, almost no one would want to visit the country. Is it true that the Chinese economy is collapsing? Social unrest is erupting soon. Tag along to find out more. Welcome to yet another exciting video. In today's video, we are going to analyze whether China is indeed collapsing. Stay with us till the end to know more. Without any further ado, let's begin. Undoubtedly, China is a beautiful land, blessed with only nature's best. With far-stretching mountains, valleys, fragrant flowers, technology, and lifestyle, China never stops to amuse us. Thanks to it all, the country has been hosting a large number of tourists. And what about now? With COVID affecting the country, the whole economy stumbled. As the situation wasn't something everyone expected, it wasn't exactly controllable, and things went over the line. On top of it, 2020 wasn't an ideal year for China like the rest of the world. The nerve-wracking COVID-19 virus took control of China and the rest of the world. Strict lockdowns and restrictions caused much hassle to the citizens and the economy. People could barely move around. The pandemic shook not only China but the whole global market. Since the outbreak was unexpected, it cost them a lot more than human lives. They even burnt currencies as the infection rate increased. But that's just the tip of the iceberg. Although it looked like China finally recovered from the grasp of coronavirus, the truth seems to be something else. Meanwhile, housing sales are crashing. The currency value is plunging. The stock market and crypto market are equally affected. The economy is on the brink of an outburst. In a nutshell, it's all the worst fears coming true at the moment. What we can assure now is that this isn't just any recession that we might have seen in the past. Why is this happening? What went wrong? China already had great stability in the global market. However, things aren't looking smooth. As we know, consumers are the king of the sector, and their demand boosts the growth of any economy. And that's where things went wrong. China is experiencing the worst position in history. The overall pessimistic sentiment is exhibited by the consumers, and it has hit the weakest level possible. Why does it matter? When the consumer sentiment stoops low, it forms a terrifying feedback loop. When consumers don't spend money on goods or services, it ultimately results in getting the existing employees laid off or having their remuneration cut. Under such conditions, no new employment opportunity will be created. So the profit for the organization reduces, and naturally, an overall lower income format will be established throughout the company. And why it's concerning is because China is the most densely populated country in the world. In order to keep the population and their demand stable, employment opportunities should be available, and the existing ones should have a positive income to begin with. That's where the story begins. China is a little bit adamant about keeping the zero-COVID policy. What is this zero-COVID policy? They are trying to strictly keep the COVID case count at zero. This has caused the economy to suffer greatly. Zero COVID cases. You've heard it right. How crazy is that? We know that it's not that easy to implement, especially when the population is over 1 billion. It's not that easy to achieve. Without thinking much, anyone can easily state that this is a terrible decision. In the case of an authoritarian government, when the goal is relatively unreachable, the government will do anything to achieve the target. To achieve this great deal, the government has made it mandatory that citizens carry a negative test done within 72 hours. No, it's not about traveling abroad or entering a tight security event. We are talking about doing the most basic needs like shopping, eating at a restaurant, taking a subway, or buying groceries or even medicines. How insane is this? Okay, at this point, let's just agree that citizens should get tested to maintain the policy. But when the population level is this high, you can't easily get tested. The testing line would be packed and hectic. So when everyone can't get tested, people can't go for basic needs or even work. It's indeed terrifying. Did you know that Shanghai had to go on a complete lockdown for 70 days due to a COVID breakout? Although it somewhat looks like the COVID outbreak has subsided now, the truth is something else. COVID restrictions aren't fully lifted yet. When a single case was reported in the city of Shenzhen, the entire city had to undergo mass testing. Imagine that the entire city is forced to test just because of a single case. Well, the entire situation doesn't sum up, isn't it? That's not it. It even affected the Chinese housing market. Investing in real estate is a favorite strategy for most. If the housing market is affected, then it naturally affects these investors. So another sector is affected. Chinese citizens have always made sure that they invest in something or the other, rather than waiting for inflation to take over their currency value. To be sure, Chinese stocks are extremely risky. Did you know that the entire $1 trillion education sector hit the zero level overnight in the blink of an eye? The delisting risk encompassing China is also a complete turnoff that wards away international investors. With the delisting fear increasing, China will have to embrace the worst effects of all these actions. In this environment, stocks don't look like an ideal option for Chinese citizens to invest in. What else? If not stocks, what's next? Do the Chinese citizens have another option? Well, we can't overlook the power cryptocurrencies hold in this world. Cryptocurrencies have taken the world by storm and continue to do so to date. However, that's not even an option for Chinese citizens. For instance, Bitcoin is considered the king in the crypto world. Although Bitcoin has crazy fans supporting it, it was ultimately banned in China. A nationwide ban was established in China in 2021. It was a great shock for the entire crypto universe, given that the majority of the investors were from China alone. The Chinese ban itself initiated a crypto crash. All this makes the citizen just invest in the property market. The issue with this is that too much capital flow didn't contemplate the less opportunity available. In short, Chinese citizens have no place to invest except in the property market. The property market in China is in a bubble. As a bubble was formed in the market, every investor out there took debts to expand their investment portfolio alone. At that point, lending money or taking debt looked like the right way. However, Chinese property market prices never took a break. The debt pile added up for so long. What's funny is that the government supported the whole strategy and didn't bat an eye to stop this loop. The country even has ghost cities. Yes, you heard it right. However, it doesn't have anything to do with the actual ghost. These houses or properties were purchased for investment gains alone. And absolutely no one lives there. Investors even had the idea of passing the property down to the generation yet to come. However, the implementation of the 3 red lines wasn't a great thing. That means that if an investor crosses these 3 red lines, they won't be able to take debt further. So they will eventually have to sell the property to sell the properties to pay off the debt. But then, who will buy the property? This eventually causes a market crash. What's alarming is the debt from the property market soared from $100 billion to $1 trillion in no time. These are the statistics from 2009 to 2019. So within 9 years, the debt 10x, and that certainly doesn't look sustainable. To ease the tension, the Chinese central bank reduced the mortgage rate. But it didn't help at all. In simple words, property investors are stuck with the current overwhelming loop. The Chinese real estate sector is worth a whopping 55 trillion 10x, so when a drop in the sector occurs, it can easily affect the entire economy ultimately. We can now understand the gravity of the situation China is in right now. The whole situation isn't exaggerated, and the depth of the situation seems to be getting intense. Please note that nothing mentioned in this video should be seen as financial advice. With that, we have come to the end of the video. Thank you for watching the video. See you all in the next video.